Good morning and welcome to Charting the Markets on Monday, the 22nd of May 2023. All eyes are still riveted on the US, where we expect President Joe Biden to meet the Republican leader Kevin McCarthy, and hopefully that meeting will help the negotiations with regards to the US debt ceiling being raised to move forward. And with that in mind, Asian equity markets have risen overnight, and you can see the effect on that on European equity markets on the daily financial bet of the FTSE 100. As we can see here, we are grinding higher at the moment on this daily financial bet and are trying to head back up again towards last Tuesday's high at 7,806. And this, together with the downtrend line going back to basically the beginning of April, and also the high seen on the 8th of May at 7,817, is the key resistance area that the FTSE 100 needs to break above in order to be able to retest its April high at 7,938. So right now, we're basically still within the middle of this sideways trading range, which we've been trading in since the beginning of May. And provided we stay above the lows seen on the 11th of May at 7,679 on a daily chart closing basis, further upside looks more likely than downside once we leave the sideways trading range. But we'll have to see how we break out of this sideways trading pattern, because quite often the breakout of such a sideways trading range gives us a good indication of where the market's headed next. But right now, it looks as if it's more likely that further upside is at hand, simply because we're trading above the 200-day simple moving average. Also because even here, you can see we have a series of higher lows. We haven't got a series of higher highs yet, but we've had a series of higher highs and an uptrend between March and April of this year, which was then followed by the sideways consolidation phase. So further upside looks more likely than renewed downside. In Germany, the picture is not just the same, but what we've seen there last week is the DAX 40 actually rising to a new all-time record high, and in doing so reaching the psychological 16,300 area. And today you can see here that we are just consolidating below that all-time record high. And we'll have to see what the US will bring with regards to progress being made on the US debt ceiling, and whether that can push the DAX 40 contract even higher towards the 16,500 area or so. With regards to support for this chart, well, there isn't really that much, because we have Friday's low at 16,202. And if that were to be taken out, then you've got pretty good support between the early May highs between 16,009 and 16,005. So that would be the next support area, but it's quite a long way away, around 250 points below current levels. So not much happening there, but upside momentum is on the wane as we await to see what the US government will be able to achieve with regards to the debt ceiling being raised there. Talking of the US, you've got the S&P 500 chart, which last week made a 9-month high, and on this daily financial bet rallied all the way up to 4,214. But then it came off again slightly on Friday on worries that the debt ceiling negotiations had broken down. And so far, we are overnight trading around 4,119. That is to say, just above the early May high here, as you can see. And that offers us short-term support together with Friday's low, which came in at 4,185. Now, if later today we were to slide through 4,185 on the S&P 500, we would then probably slide back to the mid-April high, which was made at 4,173. And below there, you've also got good support made up of the early April and mid-May highs between 4,158 and 41. So that would be a support area that might hold in case of a minor retracement lower being seen. Now, if we were to manage to break above the high seen last week at 4,214, then if I move out onto a weekly chart, what we can see here, then we would confirm our break out of this sideways trading pattern, which we've had in place since September of last year. And that would open the way for the August 2020 high at 4,325 to be reached. So that represents our next upside target on a technical basis, provided we stay above the 4,047 low seen earlier this month. Over the last few weeks, the US dollar had strengthened on flight to quality flows with regards to the worries surrounding the US debt ceiling and a possible default being seen in the US. And if you look at the US dollar index, what's happening at the moment is that basically you can see here we've reached the 50% retracement of the March to April decline. Briefly overcame it last week, went to 103.23. And now trading back below that 50% retracement. And you can see here we had a dark cloud cover on the daily chart here. And basically that means the odds are pretty high that at least short term we might see a retracement lower taking shape if we were to fall through it today. We had a minor test of that low from Friday, which was made at 102.62 earlier today. But if we were to close below that today, then we could slide back to the 38.2 Fibonacci retracement at 102.33 and probably also retest the early May high at 102. So these would be the short-term downside targets for the dollar index. Now, if for some reason further strength were to be seen with regards to the US dollar, then if we were to take out the 103.23 high made last week, the next upside target would be the 61.8 Fibonacci retracement of that entire decline at 103.55. Now, as the euro makes up 57.6% of the US dollar basket, we can see the inverse here of the DXY chart, the US dollar basket chart, in that we've seen euro dollar come off from its 110.95 multi-month high earlier this year in late April. And we are currently bouncing off our 107.61 low we made earlier this morning and on Friday, and are trying to retest the 1 month downtrend line, which comes in around 108.68. And below that, we've got some resistance also at the mid-May lows at 108.48. So those are short-term resistance levels, which we need to take out really for the euro-dollar chart to be bullish again and to take us back towards the late March highs between 109.29 and 109.73, the early April highs. So right now we're seeing a short-term reversal in that 2-week downtrend, and this will be valid as long as we stay above 107.61. And maybe it also has to do with what Jerome Powell from the US Federal Reserve said on Friday, and he basically wants to see a pause in the rate hike cycle in June of this year take shape. So we'll see whether that will be the case or not, and obviously will also very much depend on what the US debt ceiling will do. Although I have to say the US has never defaulted on its debt, and it looks pretty unlikely that this is going to be the case. But if no agreement is reached by the 1st of June of this year with regards to raising the US debt ceiling, then the US would technically be in default. Moving on to another currency pair, the British pound against the US dollar has come off over the last couple of weeks on that stronger US dollar. And basically last week just hovered above this support area I'd been mentioning over the last few weeks, which comes in between 103.86 and 103.45, 123.86 and 123.45, the latter being the 10th of April low. And basically, as long as that support area holds, cable is likely to bounce off that support zone and head back up again towards the mid-April high at 125.46. So that is the scenario that we anticipate at the moment to take shape from a technical perspective, but we'll have to see whether 123.45 holds or not. If it were to be fallen through on a daily chart closing basis, however, we would be heading back down again towards the mid-February highs at 122.70. So that would be the next downside target. But as I said, I expect this support area here to hold between 123.86 and 123.45, and for the currency pair to then bounce back. Another interesting currency pair is the Japanese yen versus the US dollar, because if you zoom out here, we can see that last week we rallied to 138.74, and that was a level last traded back in November of last year. And we had the late November high there at 139.89. This would be the next upside target in case of further upside being seen on this currency pair. But it looks more likely that short term, at least, we'll see a retracement lower now taking shape after this multi-year high, simply because we've had this dark cloud cover here on this daily candlestick chart. And you can see here the red line, the 200-day simply moving average at 137.11, representing a downside target. Now that we have basically retested the early May high at 137.77. So we may see some short-term retracement lower. If we were to slide through the red line here, the 200-day simply moving average at 137.11, then there is a good support area made up of the early January, mid-March, and also mid-April highs between 135.13 and 134.77. So that will be a potential support area for this currency pair going forward if we were to slide through the 200-day simply moving average. Commodity markets have been interesting as well. Recently, we've had a bounce back in the price of crude oil, and then a slide again. And you can see that on the daily financial bet of WTI here. We did bounce back over the last few weeks and then sort of traded sideways. And last week tried to retain this upward momentum and try to head above this 1 month downtrend line and to rise above the $73.82 high seen in mid-May, but we failed in doing so. So from a technical perspective, that means for me that after we've made this harami pattern here and had a false breakout to the upside and then actually now are trading below that harami low, it may well be the case that the decline we've seen in the price of oil is perhaps likely to continue and could in the next few days take us back down again towards the $69.39 low seen in mid-May, and also towards the lows seen back in March and early May of this year, taking us all the way back down again towards the $64.37 and $63.77 area. So that is a distinct possibility, provided we remain below the $73.82 high seen in mid-May from a daily chart closing basis perspective. The gold price is also quite interesting, as it has come off its multi-year $2,082 per troy ounce high made earlier in this month on the stronger US dollar. But with the US dollar now short-term consolidating, we have seen a reversal in the price of gold. And basically, we're heading back up again towards the previous dotted support line, as you can see here, which now because of inverse polarity can act as a resistance line, and that comes in around $1,988 per troy ounce. And above there we have got really important resistance, which basically sits between around $2,000 and $2,009. That is to say, the 20th of March high on this daily financial bet. Provided we stay below $2,009, I believe further sideways trading is actually on the cards and not a bullet reversal to the upside. But we may actually see further downside, but short term it looks more likely that we are going to see a short-term reversal on that perhaps weaker US dollar going forward, helping the gold price rise again, short term at least. Now, I'd like to draw your attention also on the price of copper. We looked at copper last week and we said that we had this sideways trading range and expected it to be broken out of either to the upside or to the downside, but this still hasn't happened yet. We are, for the time being, still trading below the 200-day simply moving average here at $8,370 per ton. And provided we stay below there, the odds are higher that we will see further downside, take us to below the 8,089 low seen in mid-May and towards the psychological $8,000 mark, but also in that case back down towards the November low at 7,850. So this would be the next downside target in case of the breakout to the downside being seen. Now, if for some reason sentiment were to improve and the price of copper, which does give us usually a sort of medium-term indication of where the economy is headed, if we were to rise above the 200-day simply moving average at $80,370 per ton, then we could see a reversal to the upside take us back up towards the mid-March and also the late April lows between $8,428 to $8,443, and perhaps even much higher than that. So it'll be interesting to see which way the market is breaking out of this sideways trading range, and that should give us a pretty good indication of where we're headed next with regards to copper. Thank you very much for watching Charting the Markets with me today. My Twitter handle, if you want to follow me, is at AxelR_IG.